Welcome to The Explainer. Today, we're putting on our analyst hats and digging into an absolute titan of the financial world, the Life Insurance Corporation of India. We're going to break down their latest numbers and figure out what they're really telling us about the company's future.
So, the big question we're tackling, based on their latest investor presentation, is pretty simple. What's the real investment case for the Life Insurance Corporation of India? LIC? Is this thing a compelling buy right now?
All right, so here's our game plan. First, we've got to wrap our heads around the massive scale of LIC's market position. Then, we'll get our hands dirty with the financials to check its health. After that, we'll look at their big strategic shift for growth. And finally, we'll pull it all together into a clear takeaway for anyone thinking about investing.
Okay, let's dive right in. And you really can't even begin to analyze LIC until you understand one fundamental thing. Its scale is just, well, it's almost in a category of its own in the global insurance world.
Just look at this number. That's LIC's assets under management as of their last report, 54.5 trillion rupees. To give you some idea of what that means, that's not just a big number for an insurance company. It's a number so huge that their investment choices can literally help steer the entire Indian stock market. And this slide just drives that point home. In this market, LIC is the elephant in the room. And pretty much everyone else is, well, a lot smaller. It's not just a market leader, it's a dominator. I mean, whether you're looking at assets, new money coming in, or just boots on the ground with agents, LIC is bigger than its closest competitor by 6, 8, even 12 times over. That's not just a lead, that's a fortress. Okay, so the scale is mind-boggling. We get it. But the real question for any investor is, how does all that size actually translate into financial performance? Because at the end of the day, size is one thing, but profit is what drives value for shareholders.
So taking a peek at their first half numbers for fiscal year 26, two things really jump out. First, you've got this steady, solid 5% growth in premium income. But the real story, the one that gets analysts excited, is on that bottom line. Profit after tax is up over 16%. That's what we call operating leverage. It shows the company's getting more efficient and is converting its revenue into pure profit at a much faster clip.
Look, past profits are great. They tell part of the story. But what we really want to know as analysts is what's coming next. And for an insurance company, the best crystal ball we have is the value of new business, or VNB margin. As you can see here, it basically tells us how profitable the new policies they're selling today are, giving us a fantastic preview of future earnings.
And boom, here's the payoff. LIC's VNB margin grew to 17.6% in the first half of fiscal 26. That's a 140 basis point jump from the year before. Now, in the insurance game, that kind of margin expansion is a really big deal. It's the clearest sign you can get that their strategy to focus on more profitable sales is absolutely working. So the big question is, how are they pulling this off? How are they engineering this kind of improvement? Well, our analysis shows it all comes down to a really clear, very intentional strategic pivot in two main areas. First up, and this is the big one, is a major shift in what they sell. They're actively moving away from the old-school, lower-margin participating plans, where profits are shared with the customer, and pushing hard into higher-margin, non-participating products where the profits flow straight to the company. This is the engine driving their whole profitability push. And you can see this clear as day in the numbers. Go back to the first half of fiscal 2025. These more profitable, non-participating products made up just a little over 26% of their new business. Now watch this. Fast forward just 1 year, that share has jumped a full 10 percentage points to over 36%. For a company this massive, that is an incredibly fast and meaningful change in their sales mix, and it's what's directly feeding that VNB margin growth we just saw. Okay, so the second piece of the puzzle is all about how they're getting these products to market. Their huge agent network is obviously a core strength, but relying too heavily on one channel isn't always the most efficient, so they're now pushing hard to diversify by building up other channels. And wow, you can see that effort is paying off big time. New business coming from places like bank assurance, that's selling through partner banks, shot up by almost 68% in just 1 year. This kind of diversification is huge, not just for pure growth, but for getting more efficient and reaching a whole new set of customers. All right, let's bring it all home. If you're looking at this as a potential investment, what's the bottom line? What's the good, and what are the risks you need to watch out for? So the argument for investing. The bull case is pretty compelling, right? You've got this undeniable market leader with an incredible protective moat built on sheer size and decades of trust. And now, this giant is clearly and successfully shifting gears towards making more money. From an investment perspective, that's a pretty powerful story.
But of course, it's not all smooth sailing. There are definitely some things to keep an eye on. Private competitors are slowly but surely eating away at their market share. They're still heavily dependent on that traditional agency force, and modernizing that is a massive, massive task. And there's also something called persistency, basically how many customers stick around. If that number isn't strong, it can quietly eat away at long-term profits. Executing this big transformation is the tightrope they have to walk.
So, when you boil it all down, here's the thesis. LIC is this giant battleship. It spotted more profitable waters on the horizon, and it has started the slow, deliberate process of turning its rudder. The new direction is absolutely the right one.
And that leaves us with the million-dollar question for any investor looking at this stock today. The strategy makes sense, and the early signs look good. The battleship is turning. The question isn't if it's turning, but how fast. Because in a competitive market like this, the speed of that turn is going to determine everything.